Yeah, welcome everyone to another pool party. This one is a quite special one because we have for the first time an issue. We give for the first time an issue the chance to talk about their pool. This new process is called POP. It's the pool onboarding proposal process. It's quite a hard word. If you don't know what the process is, maybe Ivan or someone from the ambassadors can post the link to the forum in the chat. It's a multiple step process, and every new issuer who doesn't have a pool yet can post their introduction to the pool in the forum, and this is public, so everyone can see it and everyone can comment on it. And there are other steps like there's a POP score. It's based on the pool metrics, on the issue, the history, and so on. And another important step of the process is what we are doing now. It's the pool party presentation. So the issuer has the chance to present the pool, talk about the pool, and of course give the community, the public, the chance to ask questions. And that's in my opinion, that's important because it's needed. It gives the power to the community, because what we are doing now is a part of the process and its governance actually. So everyone can raise their concerns or questions if there are any questions to clarify, and that's why this process is so important. So if you have any, because this is the first time an issuer has to go through the process. So if you have any questions or comments, please leave them in the forum in general to the process. And of course, if you have any questions to our issuer here, who is talking about the pool, it's Intero Capital Solutions. And yeah, I will ask the questions in the chat, and we have enough time to talk about them, hopefully. Yeah, then I already introduced the pool. It's Intero Capital Solutions, and the issuers are Tom and Daryl. I want to welcome here. And the agenda is roughly we will hear a presentation from Daryl and Tom, and then we will have enough time for questions and answers. Yeah, that's it from my side. A little bit longer, but I guess we can kick it off, and we can start with the pool, with the issue.
So good afternoon, everyone. I'll be walking Daryl and Tom through the presentation and sprinkling some questions throughout. My name is Zatar. I'm a lawyer / journalist, and Daryl and Tom, as you know, or may know, are the co-founders of Intero Capital Solutions, or ICS. And ICS is the first company to navigate the new pool onboarding process. That is the POP process, which is designed as a gateway to creation of an asset pool on Centrifuge. So as you've already been told, please post any questions in the chat. Daryl or Tom will get to the questions in the course of the presentation or right after. There were some questions that were posted on the forum. Those will be answered as well during the presentation or right after. And yeah, so Daryl and Tom, can you tell us a bit about your backgrounds and your path to founding or co-founding ICS last June?
Absolutely. Before we jump into that, can everyone see the screen that's shared at the moment? You should be able to see the title slide.
Yes.
Yes. All right. Tom, if you want to go ahead.
Yeah. Good afternoon, everybody, and welcome to the pool party. I'm Tom Delarue, co-founder of Intero, alongside Daryl. I'm formerly a senior British Army officer and combat aviator with about 2 decades worth of experience working cross-governmentally and internationally with a whole lot of coalition forces all over the world. And over the last 10 years or so have been very much involved in commercial ventures, working for a FTSE 100 global mining company across their 7 business units, also a construction company in the UK, and then over the last sort of 5 or 6 years in financial services, principally in the sort of trade finance realm, where I've been working with Daryl, and we'll cover this later. But between the two of us, put together just in excess of $2 billion worth of trade finance transactions. Daryl.
Hi everyone, I'm Daryl, co-founder of Intero Capital. My experience in computers goes back roughly about 15 to 20 years. Started out as a self-taught programmer. I formalized that experience. I've obtained a BSc IT management. While studying, I worked as a junior software engineer and ultimately ended as a senior project manager for a network management company out of South Africa. After moving to London, I took the opportunity to develop the trading platforms and modernize the back office operations for a multinational trade finance company. That then led to a move to Florida in the States, where I currently live, a 10-year career in the trade finance industry, and more importantly, an extensive exposure and an intricate understanding of trade finance itself. During this time as well, roughly about 2012, 2013, I became aware of blockchains and cryptocurrencies. And after surviving a number of market cycles, developed a strong passion for DeFi and a conviction in its potential. So my experience in traditional finance, the passion for DeFi, and most recently my partnership with Tom has sparked this exciting opportunity that we're here to present to you guys today in this pool party in the form of Intero Capital Solutions. Now that you know a little bit more about us, Tom and myself, I'd like to introduce you to the concept of Intero itself. So just as a heads up, some of the points and jargon that we will be going through may seem foreign. We will expand upon these during the course of the presentation, giving you guys some working examples to help it make it more understandable and more digestible for you in this format as well. Having said that, I'd like to give you a high-level overview of Intero's vision and mission. So Intero is aiming to become a leader in DeFi-enabled working capital solutions. We aim to serve a diverse sectors and jurisdictions. So what this ultimately means is we want to offer solutions to a broad and diverse base of buyers that deliver on their working capital requirements. We do this with a strong belief in building long-term relationships with our buyers and our partners, and believe that we can all benefit from collaboration and innovation to identify opportunities that exist within that network.
Sorry?
Go ahead, Zata.
So, Daryl, I want to walk you back to your experience. You mentioned you have over a decade, or your slide mentioned you had over a decade of experience in cryptocurrency. Can you elaborate a bit on the experience with cryptocurrency?
Of course. So that started, as you know, most people I think find themselves starting out in cryptocurrency, where it's just participating as the general retail investor, you know, identifying some opportunities in tokens. Back then it was really sort of Bitcoin and Ethereum at the time, and built out my understanding for what these meant over that time. So that also included diving into some of the back end, some of the underlying infrastructure and the mechanics of the protocols themselves, which we'll also expand on towards the end of the presentation to show how that's sort of view that crypto and DeFi is a community that doesn't just take sort of involvement on the speculative side, but there's a lot more behind it that helps stimulate and grow this ecosystem further.
All right. Now, both you and Tom come from fairly different backgrounds. How did you meet and end up working together?
We actually were looking at some consulting opportunities some years ago, and we came together, albeit in different parts of the world, with a a distinct interest in trade finance transactions, and then as these things do, one thing leads to another, and we ended up in a sort of partnership scenario.
Hey, buddy, this ain't gonna work anymore for me, okay? If you want, we can go to the Costco, get you some wet wipes if you want, but that ain't gonna work for me no more. Sorry, guys.
You're gonna have to mute somebody there, Chris.
Yeah.
I said, yeah.
Can someone please check
There we
these settings?
All right. I just missed the end of the response, Tom.
Yeah, no, that's fine. That was an interesting interlude. So we, as I was saying, one thing led to another with the sort of partnering arrangement that we were cooking up with a mutual interest in really kind of accelerating payments in the sort of trade finance world and the supply chain. So, and we'll come on to more of this later in the presentation in terms of what the opportunity actually looks like. But it's a similar opportunity to the one we saw 5 or 6 years ago, where we realized there was a very distinct need for additional working capital in the supply chain that wasn't otherwise being provided by banking entities or other types of funders. So that's the kind of the origin, and then we move all the way through the sort of traditional finance mechanisms into something much more compelling, from the point of view of what DeFi can potentially offer today, rather than say 18 months or 2 years ago. But again, we'll cover that later in the presentation.
So to add to that and tie it back to sort of the slide that's on screen at the moment. So we set out with a view to provide additional liquidity to trading companies that ultimately would benefit from that additional liquidity without constraining the existing lines of credit or their existing operations. We wanted to come in as a complementary solution to those already in place, with a goal as well then to originate these high quality real world assets into the DeFi space, which I'm sure we've all seen over the last couple of weeks can benefit from these stronger forms of collateral to help the underpinning of the DeFi ecosystem itself. So we're looking to originate these assets that can generate returns for investors in the junior and senior tranche of TinLake, of 4 to 6% on the senior side, and 7+% on the 7+% on the junior side, and 4 to 6% on the senior side.
Let's just take a step or two back. Can you tell us in a little bit more detail what it is that Intero Capital Solutions does? Maybe break it down a bit. And I understand you're involved in the buy side trade financing sector. Can you just elaborate on that? Some of our listeners may have absolutely no idea what that entails. And
Absolutely.
Also for those of our listeners who are maybe brand new to DeFi, that stands for decentralized finance. And there was some mention of tranches and so forth. That will be broken down later for those of you who may be unfamiliar with those terms.
So working capital solutions in general is quite a broad term. So what we can focus on in this discussion, in this pool party, given that this is the product that will ultimately originate the assets into the TinLake pool, is our accounts payable solution. So a high level example of our accounts payable solution that rolls out as a trading facility. So the example of this is quite a simple one. So a trading company, which we refer to as a buyer, is a company that's looking to buy from its suppliers and sell to its customers, usually with a value add proposition in the middle there. So for example, a candy company that's buying sugar from a sugar mill turns that sugar into candy and then sells it on to retailers. So in this example, let's say that this candy company is looking to expand. They're looking to roll out a new product line that has been tested in the market and has been well tested, well received. There's an opportunity here for them to expand their product line, but they're not sure how to access liquidity or capital to grow their operations, to expand their operations and their product offering. So generally, the candy company would be a strong company with track record, and they would have qualified for a trading facility with Intero. This trading facility allows them to secure the ingredients from their suppliers. And the way that works is Intero steps in through the accounts payable solution to pay their traditional suppliers on their behalf. In other words, there's no initial cash outlay necessary for that candy company to be able to expand and take on that additional product range. They can then manufacture the product using their raw inputs and sell it on to their customers or retail outlets in this example. Once they've sold that product and collected the proceeds of that sale, in other words, they've got the cash in their pocket from having sold the candy, they can then use those proceeds to settle the Intero trading facility. So this is a, oh, sorry, slips went across there. This
Can I interrupt you for a moment?
Yeah.
Just for a moment. Facility, some people may not be familiar with that use of the term facility. What's a facility in this context?
So it's basically the relationship between the buyer, the candy company, and Intero that allows them that ability to request early supplier payment. It can be, in its simplest terms, you can think of it as a line of credit, but as we are a trading partner, we step into that supply chain relationship as a supplier in their supply chain, albeit in a transparent fashion.
So I suppose just to break it down a little bit further, and we're not talking about loans and things because we're not talking about sort of banking instruments and other areas on a balance sheet, but we're just talking about trade receivables. So you imagine a facility is put in place for a buyer for $1 million, and that facility has a tenor of 120 days. What it means is, in real terms, is that that buyer is able to put $1 million, up to $1 million, into the supply chain, its immediate supply chain, every 120 days, which means it's essentially pumping $3 million of additional liquidity into its immediate supply chain on an annualized basis.
So that's part of the value add proposition then to the buyers themselves. So essentially it's giving access to liquidity that already exists within their operation, but is maybe trapped in a certain segment of their operations.
Can I just ask,
Christian,
can everyone mute, please?
Yeah.
Thank you.
So for example, they may have cash trapped in their debtors book. So the debtors are the customers that they would be selling their products to. But after selling the products, they generally have to wait, 30, 60, 90 days to receive that funding. This product helps accelerate that process, essentially injecting that layer of liquidity and capital that otherwise wouldn't be there in its simplest form. It's trapped within other layers of their organization. So this allows them to improve the relationship with their suppliers. They can move on to a cash basis with their suppliers, where Intero is settling their invoice on day one, which then passes on a lot of the benefits of these products up the supply chain. Because if you think about it from the supplier's perspective, the sugar mill, they've now received settlement for their goods on day one, rather than having to grant terms to the candy company. So these benefits start bubbling up and down the supply chain and essentially increase the velocity of money, or the value for that $1 and how quickly it's able to turn within the economy. Ultimately, it can enable expansion and growth within the buyer's operations. And again, this is a complementary solution to existing lines of credit. We're not looking to compete with traditional banks per se. We're looking to augment the buyer's existing working capital with this additional solution.
So up until now, how have you sourced funding for the facilities that you've provided to your buyer clients?
Yeah, so so from a traditional finance perspective, over the last, actually in Daryl's case longer, but up to the last sort of decade, we've utilized institutional lenders, funders who are involved in facilitating trade finance transactions. We have operated with bespoke funding mechanisms. We have operated with ultra high net worth individuals, family offices, a whole load of different entities. And in fact, some of that will come to the fore again when we go through the DeFi mechanism later on, because there's a lot of commonality. And this is, I suppose, part of the point of all of this, which is that question around, why DeFi now? Why not just stick with traditional financing mechanisms that were working well for us in the past? And that is because there is a great deal of commonality between those two ecosystems, and we have identified through extensive experience of traditional financing mechanisms, and as I say, processing over $2 billion worth of transactions, that there are real benefits of bridging those two worlds. So I'm slightly expanding on your question, but it's important to get to why DeFi? And of course, with the current financial revolution, if you like, and the present bear market and crypto winter and everything else that's going on, from a strategic perspective, what we've seen over, and everybody has seen really over the last 2 or 3 years, is this real acceleration in terms of the evolution of blockchain developments, DeFi activities, and has kind of pushed all of this stuff into the foreground, and has increasingly created viable alternatives to the existing financial mechanisms which were in place, some of which were very difficult, or are very difficult to deal with, lengthy processes, a lot of red tape, funding structures that have mandates that are very, very constrained, and risk appetites out there that are increasingly in sort of traditional financing mechanisms, more constrained. So on the one hand, the DeFi ecosystem is maturing very well indeed in terms of our ability to be able to now start to put together kind of these bridging mechanisms between TradFi, CeFi, DeFi, and the sort of progression of all of these ecosystems combined. Noting, of course, that as we go through these cycles, and as we've seen in previous market cycles, each iteration brings a significant amount of innovation, improvement, maturity, and we're seeing that right now. We're seeing some of the rough stuff being cleared out, and we're seeing a lot of entities that we're dealing with and others who are really looking in a lot of detail at their organizations to make sure that they are robust and fit for the future. So, from our perspective, whilst we have got a whole lot of relationships in the traditional finance world, the relationships that we're growing increasingly through platforms like Tinlake and the Centrifuge mechanism to be able to create opportunities for Intero to bring real world assets on chain, to collateralize them and create really credible and interesting investment opportunities for cryptocurrency holders and others who are investing in the DeFi mechanisms is pretty profound. So that kind of wraps up a lot in that one question, but takes us neatly into DeFi.
Yeah, I was going to ask you about DeFi. Now, you started your dialogue with Centrifuge about a year ago in the midst of the cryptocurrency bull market. Now that crypto has declined or entered a bear market, has this dampened your motivation to work in DeFi, and will it cause you to scale back your DeFi integration plans?
No, absolutely not. In fact, it's quite the opposite. As Tom said, given the, and it's not just DeFi markets, it's markets in general, right, are experiencing massive contraction at the moment, reallocation in investment classes, risk appetite, and so on. This has actually given us the opportunity to bring these real world assets that are non-market correlated, that survive these kind of fluctuations in market cycles, to bring an alternative source of yield into DeFi that isn't reliant on the cryptocurrency ecosystem itself. It's not this feedback loop within DeFi that we're kind of watching decline in terms of total market cap, thinking, wow, well, this is really an unfortunate time. Not at all. This is a great time for new ventures to be built in a relatively tough market environment compared to 6 to 9 months ago, through the peak of the bull market cycle in 2021. And we're using this as a foundation and a launch pad to help emphasize our positioning within the bridged position between DeFi and traditional finance.
Can you tell me about how big the market is globally for trade finance today, and what the potential is for more growth?
Yeah. So these next two slides, which we can move through reasonably quickly, provide a snapshot of what that opportunity looks like, and in particular looking at how we can address the SME financing gap and so forth. And quite honestly, we could take analysis.
What's SME? Not everybody's going to know what that means.
It's the types of businesses, the small and medium enterprise businesses, but that's not exclusively what we're dealing with. But these are some figures around those types of businesses. So the kind of medium and smaller businesses that often desire to utilize different forms of liquidity to assist with their daily operations that otherwise they might not be able to take on board because they don't have the balance sheet strength necessarily that the banks are after to be able to give them a $10 million line, for example. We do, though, as I said, operate with much larger organizations who also are keen on working capital facilities, but for different reasons. But what these numbers really demonstrate is sort of forward-looking analysis with respect to the United Nations Sustainable Development Goals. You can see $3.4 trillion gap in global trade finance. The Asian Development Bank identifying a shortfall of 1.7 trillion required to service the trade finance market. And within the SME financing space, there is a significant delta between what is assessed to be the current requirement and what it is that can be provided in terms of liquidity. I say we take these figures kind of loosely because, you know, quite honestly, we'd be able to find, you know, different figures kind of portraying the same thing, but we're talking about orders of magnitude here. And what we're actually saying, we'll see this through the next slide as well, is there is a very significant opportunity to provide funding to entities that simply are unable to tap into the kind of liquidity that they require. And it's about going out and finding, through origination mechanisms, which we'll come on to, those entities, and then putting suitable financing facilities in place for them to augment their in-place banking lines. Darryl, if you just move on to the second one.
Sorry, I can see, just before you move on to the next slide, so it looks like there's trillions of dollars in potential new business. Is that fair?
Yeah, there's so if we think about ourselves and the pool party, and we think about even the sort of the ecosystem that we're dealing with, you know, there isn't any way that we're even going to touch the size of this opportunity. The opportunity is vast and it is growing very significantly over the next 5 years, which is what the next slide talks to. And you know, what you can see here is that if you just take an example, 1% of assets under management from the world's 10 largest banks were invested, we would end up creating within the DeFi ecosystem, you know, an experimental, you know, $1 trillion injection of capital to be able to then build out that ecosystem. We could take other numbers, but there is just an example. The slide at the bottom just gives a broad indication of the trade finance market cap 2021 versus 2027, measured in trillions, 7.6 versus 10.9, nearly 11 trillion. The gap is widening, as is the volumetric requirement for trade finance. And then just looking at the top graph, you can see that in terms of total value locked in DeFi liquidity, you know, it's reasonably small at this point. The overall crypto value locked at its height was about 2.9 trillion. DeFi liquidity locked currently is a lot smaller than that. Probably at its height was about 8 to 10% of the overall crypto value locked. So there is a big opportunity here to build out the liquidity mechanisms in DeFi, and 2, tap directly into great businesses out there that are moving real world assets all day, every day, and then bringing those on chain to properly collateralize the DeFi environment, which is something that is so desperately sought by a lot of entities, and some of which we work with today.
So I see there's a huge potential market with likely thousands of businesses that could use trade financing. So how do you assess clients? I mean, your would-be clients, and what's your process to minimize credit risk?
Yeah, so it's a holistic approach to credit risk, and we expand on this in a couple of slides as well. But essentially what we try and do is take a complete view of the buyer that is approaching us with a requirement for a facility. And that really starts with getting an understanding of why do they need a facility, hearing their story and how, you know, the benefits of additional liquidity would improve their operations. So starting at that point, we're establishing that relationship and understanding of the buyer's working environment, their business, their ambitions, their future plans. from there, we take a more objective approach. So objective in the sense that we use financial information to help us with our assessment. There's some subjective analysis where it's the general, this is my feel of the opportunity when compared to other competitors in the market, for example, what is their positioning and so on. And then as well combine that with third-party information, be it credit bureaus or funder representation on our credit committee, for example, to give us that overall risk mitigated approach. It starts right at the beginning with getting that understanding of the requirement for the facility, and then continues on during the life cycle of the relationship between Intero and the buyer. Regular reviews, for example, just checking in and touching base on a regular basis so that we are able to react and respond in a proactive manner, but also with information that is not, a quarter, 6 months old, where we're playing catch up. It's to really integrate ourselves into that side of the relationship to understand the requirements of the buyer and mitigate the risk around that.
We believe that the real differentiator here between companies like Intero operating in this space is the ability to be able to source high quality obligors, so buyers, the clients that we're talking about, with really very compelling assets that require funding, whether that's through traditional finance or DeFi mechanisms or elsewhere. Because if you can get that right, then everything else will fall into place. And also you then don't need to then fall back on some of the more punitive measures that might need to come into play, for example, when there's a default or something, which again, we will come on to later in the presentation. So at the heart of this type of structural setup is it's an absolute laser focus, an eyeball to eyeball focus on the obligor themselves and their supplier base to make sure that we truly, yes.
What's an obligor?
The buyer, the clients we're talking about. Okay. So the point here is that all eyes are focused on the buyer, and we've got a slide later on which will demonstrate that for you. And if we've got that right, then everything else should work reasonably smoothly. And we have seen in the past where organizations have got that particular focus wrong, and they have spent perhaps too much time on worrying about particular funding mechanisms or trying to put trade credit insurance in place to cover gaps in their organizations, and those things always tend to turn out reasonably badly relative to the better constructed businesses with their eyes focused on the right aspect, which is the buyer itself.
All right, Daryl, you mentioned a credit committee, and I understand that this credit committee has a role in assessing the credit worthiness of your potential clients. Can you give me a little bit more detail of what the credit committee does, and also comment on how Centrifuge DAO might get involved in the evaluation of the credit worthiness of your clients?
Absolutely. So the credit committee's main purpose is to provide feedback and assessment on the quality of the buyer that is being originated and is looking for a trading facility with Intero. So it comprises of members from Intero. Myself and Tom, for example, would be members of the credit committee. It then further invites participation from the funding environment. So Intero Trading, which we'll introduce later as well, as the asset originator from the legal sense. They have representation and say in the type of credit that we are originating and ultimately trying to grant trading facilities or increase the levels of trading with. So in the context of how Centrifuge as a DAO could come into that, given that we're looking to deploy into the Centrifuge environment and source tin and drop investment out of the community, we would open up that forum, that credit committee forum, to input from the community who would ultimately be investing in the risk that we are originating. So it's really a rounded forum to analyze, discuss, and decide the outcome of these potential buyers to whom we want to extend trading facilities to.
And bear in mind that there's an important addition to this, which is that if you take what Daryl just said and you do a compare and contrast with the way in which a lot of this works in traditional financing mechanisms, which are generally tantamount to closed shops, it is very, very difficult often for funders to get a really good feel for, the underlying credit worthiness of the businesses and the products and things that they are funding. So this is a really interesting and reasonably novel way of doing this kind of business and putting these kind of transactions together, where you're getting, if you like, sort of credit risk input from various quarters, and so you don't have a system which is essentially kind of assessing its own homework. The credit worthiness of these transactions needs to be really solid for these things to be able to perform over months and probably years.
And do you make use of third-party experts in your credit worthiness assessment process?
Absolutely. From people with a background in finance, auditors, and so on, to others that are used to performing sort of the underwriting function, taking risk, analyzing it, pulling it apart, looking for holes, looking for opportunity as well, that maybe hasn't been identified. It's a rounded approach to it, to get all of those inputs to deliver that complete overview of the risk of the buyer that we're looking to enter into a relationship with.
Now, got it. You've been in business for about a year now. Can you tell us about the growth of your business to date? What's been the volume of your transactions? How many clients you've got? What industries and countries do most of your clients come from today?
Yeah, so before diving into that as well, because that sort of comes secondary in terms of the process, right? Where first we got to establish the operating environment and then originate into it. So Intero itself, we're structuring the opportunity here really to, again, introduce this DeFi liquidity into traditional financial markets. So we do this by originating the non-market correlated risk mitigated assets from qualified buyers. So that's a bit of a mouthful, right? And we've touched on some of this already here. But if we look at the opportunity that Intero is putting together, which ultimately leads to that diverse pool of buyers and risk that you're asking after, what does all of this mean? So non-market correlated is generally an asset whose value isn't tied to fluctuations in traditional markets. In other words, the returns generated out of an investment into a liquidity pool with assets originated by Intero, those returns do not follow the same ups and downs and ebbs and flows of traditional markets like Wall Street. Trading generally continues at similar margins in various market conditions, because you must remember this is also the underpinning of economy. At the end of the day, product has to flow, wheels have to turn. On the risk mitigated side of it, so risk mitigation being our strategy to lessen the negative effects of threats and disasters of business. So we've touched on the holistic credit approach from onboarding through to regular monitoring by including independent evaluation, third-party information, as well as that direct buyer engagement and funder representation in our credit committee. We further expand that risk mitigation by obtaining collateral from the buyer in various forms. This is no different from when, say, for example, you look to take out a loan from a Dow Treasury. You're expected to put some collateral up. What is collateral? What is collateral really? It's something to secure the loan against. So other than trying to get that comprehensive understanding of the risk, we try and then secure that risk with things like guarantees, be they cross-company, parent company, personal guarantees, cash collateral in the form of deposits, or even having the buyer participate in a transaction, for example. And then, of course, there's the more traditional sort of risk mitigation where we can take security over some of the assets on the buyer's balance sheet. So that would include taking title over the stock. In other words, the goods that we are paying for on behalf of our buyer remain ours until that trade is settled. Finally, we add a layer of credit insurance, which helps recover potential losses in the event of default. With regards to the types of buyers, so we refer to these as qualified buyers, right? They have to meet our criteria. Our general criteria is looking for vertically integrated SMEs and larger organizations. Vertically integrated, if I go back to the example of the candy company, for the candy company to become vertically integrated, they would actually purchase the sugar mill and take control over that aspect of their production line. So it's a company that's got bigger representation, say, than just outputting a widget. They've got more control over what comes out of their production line as well as what goes into their production line. Generally, they should also have a compelling business model, the story behind them, their ambitions, their future goals, and so on, as well as their history. How did they get to where they are now? What did their previous growth look like? What steps and mistakes have they made previously that we can all learn from when structuring a trading facility? So at the end of the day, we're really looking for companies that are well-positioned, or buyers that are well-positioned, looking for liquidity to expand their operations or take advantage of new opportunities.
Zata, just conscious of time, if you don't mind, we'll just move through a couple more slides and then we'll sort of get to the back end of the presentation. But there's a couple of important ones that we just need to go through. So are you happy for us to carry on?
Sure. Let's, why don't we look at how all this works on Centrifuge? Or how it will work on Centrifuge. I understand you've got that's right, a diagram with that shows the process.
Yeah, so Daryl and I will talk to this slide, but essentially what we're talking about here is originating real world assets for DeFi liquidity and creating investment opportunities in the DeFi space. One of the questions that came up earlier on in the week was around origination, because you can see at the bottom of that slide, if you like, the entity with primacy is actually the buyer. So it is important to talk about origination. We have really detailed origination mechanisms across all kinds of domains.
Excuse me, can you explain for those listeners who may not be familiar with that term what origination means?
Yeah, in its simplest form, it is the mechanism by which we create buyer relationships. So there will be companies out there looking for, or perhaps not looking for, working capital facilities, but nevertheless would benefit from working capital facilities. So we have a whole lot of relationships. These are people and businesses out there globally who can find these businesses through their own relationships, through their relationships with us, and then they introduce them to us, and at which point we can start to go through all the sort of the processes that we need to put a facility in place should the buyer warrant it. So there's this origination mechanism which gets us to the point of the beginning of this slide with respect to the buyer, and really what Daryl will just go through in a second in terms of its components is a mechanism that allows a buyer to take control of his business, his or her business empire or their business empire, and the supply chain mechanisms, the movement of product and goods, and the movement of cash in and out of that supply chain, to allow those buyers to take control of that process. So they will have direct relationships with their suppliers, they control the relationships with the suppliers, and they work hand in glove with Intero Capital and other bits of this process to ensure that they get what they need for their suppliers at the right time in the right amount and so forth. I'll hand over to Daryl to just run through the mechanics of that.
Yep. So what we have here is a process that works on-chain and then makes its way off-chain, on-chain and off-chain. It's this back and forth relationship as we go through the trading cycle. So as Tom said, we generally start with the buyer over here, who would be the sugar company, looking the candy company, looking to pay the supplier, the sugar company, for that raw ingredient. Through their relationship with Intero Trading, we provide them that self-service environment, giving them control, flexibility over how to deploy this liquidity within their supply chain to extract maximum value, right? To take advantage of those opportunities or expand and, grow the business themselves. This is then made available to them through online platforms. So the online trading platform made available by Intero, as well as the online platform TinLake, which takes this all on-chain. So we have the self-service component being the buyer, looking for that solution. Intero as the component delivering that solution as the bridge between traditional finance and decentralized finance, with Centrifuge TinLake acting as the marketplace. It's that intermediary between the asset originator or issuer, being Intero, and ultimately what is, as we mentioned earlier, a pretty diverse funding structure that sits behind it. Initially tranched in tin and drop, depending on risk appetite and the level of participation that's desired from the potential investor. But again, if we look behind the scenes, generally it's high net worth individuals, institutional investors, of course, the retail component that comes in as well through Centrifuge. And again, you're bringing in some more DeFi exposure through DAOs, which again are pretty diverse themselves in terms of how they back their treasury and how they raise the liquidity to then lend on within the DeFi ecosystem.
So in the asset pool that you envision creating, what are the assets that Intero Capital will be dropping into the pool?
Yeah, Darryl, maybe if we go onto the slide with the graphs, so we can. I mean, yes, we're talking about trade receivables, but yeah, this came up, 10 days ago when we were going through the various posting process data. So we're talking about
wrong slide. Wrong slide.
No, it's fine because
was it this one? Oh, okay.
Yeah, we can talk about it through this mechanism.
Okay.
So the assets are trade receivables. So these are real world products moving up and down the supply chain, and you can see on the graph on the left that we've got buyers in terms of sort of diversification of sectors, products, jurisdictions, and so forth. Spread not just geographically, globally, a lot of them sort of Northern Hemisphere, Europe, US, but in other jurisdictions as well. But in terms of sectors, there's a whole list of sectors there, which I won't run through now, but gives a really, decent spread of sort of non-perishable products and goods that are moving on a daily basis through the supply chain. A lot of them actually have some sort of association with sustainable projects, impact projects, and so forth. And it's just worth mentioning at this point that we have a related company called Morven Capital Resources, which provides origination mechanisms, to the point I was making before, to Intero. But we Intero work hand in glove with Morven Capital Resources to create the sorts of facilities that are represented on this graph. And the whole point here is that we're going to grow these facilities over time, kind of commensurate with what you can see there across those various jurisdictions and sectors. Out to sort of the middle of 2023, you can see the sort of magnitude of what we're talking about. So these would be trade receivables for buyers who are currently working with us, who we know well, that we have a track record with. So if you like, they are current, but also a future pipeline that we are pretty assured that we will be able to deliver, because we know and operate well in this environment.
So just on that point, can you just expand a little bit on where your business comes from? What percent are inbound referrals compared with current clients that are extending their existing facilities?
Yeah, so I just, again, it was in the interest of time, but I just briefly covered that when we were talking through the last slide. So essentially what I was summarizing was that we have various in-house relationships that allow us through direct buyer relationships and through origination networks, allow us to be able to create those, we can develop existing relationships, but also create new relationships with buyers to then expand the facility, the overall aggregate facility portfolio. I've mentioned Morven Capital Resources, so I won't go into that. And then inbound referrals from all sorts of other avenues, whether they're professional networks, whether they are the likes of logistics company providers who have relationships with us, who have a whole network themselves of businesses that require working capital facilities. And then down at the bottom, we have other normal marketing avenues and trade and networking events and so forth that we would pursue. But I would say there's a caveat with that, and that is that a lot of what we are trying to do is to create direct relationships through introduction to businesses, rather than doing blanket advertisement for trade finance facilities, because then we're not necessarily getting inbound the quality of clients that we desire. So we actively search for those clients and those buyers rather than just having a deluge coming to us looking for working capital facilities. And then on the right-hand side, I think Daryl summed this up fairly neatly earlier on. There's a sort of basic criteria in terms of what we're looking for. We're looking for, companies with strong balance sheets that can hold down these trade credit facilities alongside all their other debt facilities, and they don't necessarily need to have been having a trading record for 3 to 5 years. They could be relatively new companies, but they could have very significant future potential. So we would be able to merge those in as well.
I want to get to some of the questions that people have asked on the forum and elsewhere. There was one question regarding the setup of the asset pool in future on Centrifuge. What will the typical asset maturity period be? You mentioned in your materials that the assets will be exist on a rolling basis every 90 to 120 days. Is that fair?
Yes. So generally, when we issue the facility to the buyer, we would give guidelines as to how long a trade can be open generally. So how many days do they have until they have to settle that trade? That's usually lined up with their internal cash flow. So again, using that example of trying to sell the goods, receive the money, and then settle the Intero trade, it really largely depends on that side of things. So it's usually between 90 and 120 days. And generally what we find is it tends to lean towards the 120-day mark, because again, that just relieves the pressure on the buyer and gives them more time to make use of that cash that's then made available within their operations. So 90 to 120 days revolving facility. So every 90 and 100 or 90 to 120 days, there's a new trade, but averaging closer to the 120-day side.
Thanks. Now, just returning to that slide you'd shown earlier with the graph of forecasted growth for the next 12 months. How confident are you in your growth plans? And does this future growth consist of existing business, or is it business you'll be bringing on chain after the model proves itself on Centrifuge?
I think honestly, I think we generally covered that in the last session on this slide. But Daryl, did you have any just additional points you wanted to make?
Well, really, just to summarize everything that we've sort of touched on with regards to origination, what this pipeline sort of does for us is confirm that there is the demand for these facilities, that we have originated through those channels we've described, where it's a focus on quality and not just a billboard on the side of the highway inviting anyone and everyone to apply for a facility. In that sense, it's targeted on quality obligors. And so how confident are we? We're pretty confident. And this is a mix of existing client relationships and future client relationships where we've already engaged with them, right? We already have a pretty good understanding of their needs and what a solution from Intero would look like.
Now, another question, thanks for that answer. Another question that was posted on the forum is in regards to the senior financing. That is the senior tranche that will be on Tin Lake initially. Is there a prospect of raising some portion of the financing from existing investors?
Yeah, the answer to that in short is yes. So we are operating, as Daryl said, there's a whole spread of potential investors or current investors, and then also potential investors with whom we're working, institutional high net worth individuals and everything in between, who are interested in tin and drop. So yes, the answer is yes.
And another question that we had on the forum was, do you provide fixed or floating rate facilities? And can you elaborate on what the difference between those two?
So it's sort of a both kind of answer, right? We provide a fixed facility in terms of the rate that we extend the trading facility to the client to. So say, for example, 13% per annum. that is always fixed for a period of time. When we go through our credit process and perform a review, we may feel that the risk profile is slightly changed, either improved or not in some cases. So the rate that we lend to the client or trade with the client would follow the strength of their operations. Previously, we've used things like floating LIBOR rates and that kind of thing on a daily basis and so on. But we like to try and provide a level of stability to our buyers so that they can plan for the facility and how they plan on deploying it within their supply chain. And again, what products maybe they feel will provide them the best return on the use of the trading facility.
All right, thank you. Yeah, we're ending the top of the hour. So one question I had was about the pool onboarding process. So you're the first company to come this far in that process. Do you have any comments on the process and whether it's been helpful to you? And if so, how has it been helpful?
Yeah, so it's been an interesting journey, you know, Intero and Centrifuge. Like was mentioned earlier, we first reached out to Centrifuge about a year ago. And so discussions have been ongoing for quite some time now. And during that time, of course, came the evolution of the onboarding process to what we're basically going through now. So in terms of our experience with it in this new format, it's quite different to where we were previously. The level of community engagement that's being drummed up through the forum posting, you know, the initial proposal made on the forums, the back and forth, the voting, even this, you know, this pool party itself, it's sort of a refreshing approach to experiences that we've had in the traditional finance side, which generally involve an hour in a board, you know, in a boardroom where you've got your 1 hour to make your pitch and so on. And it's quite cold in that sense. So this community feel, and again, going back to how we sort of developed Intero as a concept with DeFi and the ethos and principles behind DeFi as a major component of how we're looking to structure and operate our business, albeit, you know, in a traditional statutory environment. It's been a very useful experience and, you know, quite an interesting one. And given that we're the first ones to go through it in that sense, it's been exhilarating, not knowing what's coming. You know, you can't refer back to other people's applications and so on and kind of track the process there. And given that each process and each issuer is bespoke to themselves, you know, with their own assets that they're looking to originate into the Tinlake platform and liquidity pools. But yeah, it's been exciting. It's been an interesting process.
And the only thing I would just mention is that, you know, we are absolutely more than delighted to help Centrifuge refine the process, you know, as this thing comes to fruition. So yeah, very, very happy. I mean, we're literally on time, but Daryl, perhaps if we just go to the DeFi project slide and if you could, Zata, if you could just give us, you know, 30 seconds on this. I think this is important to the whole ecosystem.
Take 90.
Okay,
90
thank
seconds.
you.
Yeah, tell us about your other involvement with DeFi. I think everybody's going to be pretty interested in this.
Yeah, so there's two main streams of our involvements in DeFi, and this is the broader ecosystem, right? This is not just Intero Capital Solutions as an issuer on Tinlake. This is involvement in crypto. Like I said before, I've been involved in crypto for, you know, a decade odd now. And what we've done under the identity of Postchain, which was started before the concept of Intero was formalized, we've started up ventures supporting the infrastructure, the back end, through Kusama and Polkadot validators, a Tezos bakery, and most recently a Helium hotspot. So what this is showing is basically our support of the DeFi ecosystem outside of just participating in a Tinlake liquidity pool.
Yeah, and on just in terms of sort of NFT collaboration, just really by extension. So we're involved in some really exciting stuff on the NFT front, bringing real world assets into the NFT space, looking at how to create, you know, multiple active and passive revenue streams out of this stuff. Some of it relates to Malvern Capital Resources, which is the other company we were talking about, looking very favorably on conservation and sustainable and impact projects, grouping in local community activities so that they derive direct benefit from these projects. We're looking at stuff all over the world with carbon offset and carbon credit ecosystem attachment. And yes, it's been really exhilarating working with with some really passionate people. So we want to build some of these projects out. So I think in the round you can see there's a lot more to our offering in the DeFi ecosystem than trade finance invoicing and so forth, which is a great place to leave it.
So we see 2 apartment buildings, or what appear to be apartment buildings, on that slide. Are those examples of real-world assets that have been tokenized as part of this NFT collaboration you're talking about?
No, that's just a good-looking picture with a bit of green around it.
Okay.
But, by example, you talk about carbon offsets and carbon credits and so on. That involves forestry programs and so on. So, that theme of ESG comes into the fold again on the NFT side.
Yeah, I mean, we're just dealing, I won't go into the detail, but we're just dealing with one at the moment that is exactly that: forestry, plantations, vertical farming, pyrolysis, mills, all kinds of stuff going on. And it's real world, it's digital assets, it's the bridging of all of that, and looking how to create multiple revenue streams. Really good stuff.
Christian, I can stay a bit longer if other people want to and are able to. How are we doing for extra time? And what's the situation regarding questions in the chat?
Well, I don't have any problem to stay a little bit longer. There are no questions from the chat. So if there are any questions you want to ask, really urgent questions, then we should go ahead.
Well, I wanted to go at least finish the questions that had been posted on the forum.
Okay.
Some of them are slightly esoteric, but now's a good opportunity that we have Daryl and Tom with us to get them answered. So one of the questions from Janice was, the range of size of the facilities is that you offer currently is between 750,000 US to 5 million, and the rates of interest on those facilities range between 12 and 20%. She notes that range is quite wide. What is the weighted average for both, but based on the current portfolio and also the future expected portfolio?
So the answer to that question is that it depends. So in terms of this idea of the current portfolio and future portfolio, we currently have one pipeline because we are intending to go live with this pipeline into the liquidity pool mechanism as we have discussed. But looking at this from a traditional perspective and our experience, when we onboard clients and we go through the whole credit assessment process and we take all these different feeds in and we really analyze the risk that we're looking at and the quality of the buyers and the quality of the products and their trading history and their probability of default and all these sorts of things, out of that process comes an ability to be able to either say, no, sorry, we can't offer you a trade finance facility because of reason X, Y, Z, or we can, but this is essentially the frame of the term sheet. And the framework of that will be relative to the quality and the strength and the ability of that buyer to be, all those buyers to be able to hold down that trade finance facility and repay it on a 120-day basis. So some of the buyers will be larger, some of them will be medium, and some of them might even be smaller. And they will be in different sectors, different jurisdictions and so forth, which is why we have this rather seemingly rather large spread of facility sizes, albeit we can go well beyond 5 million and have done in the past. We've gone well beyond that. But also in terms of the various rates, 12 to 20%, that reflects the credit risk that we're talking about.
Is that 12 to 20%? Is that going to change given the rise in interest rates recently?
Well, we're not correlated to. Daryl was going through the non-market correlation aspects of this. So again, we will look at it relative to cost of funding, relative to the risk that the buyer presents, and then we will present them with whatever the appropriate rate is. So whether it will change or it won't change, again, is subject to determination through that process.
And in regards to the larger facilities that you just touched on, is there a different assessment process in regards to how you evaluate those potential
No.
trade financings?
No, there's no difference in terms of the process that we follow between, say, a multinational organization with offices all over the world doing billions of dollar turnover versus, a smaller trading company, candy company, for example. Everyone goes through the same process with the same analysis through that credit committee. There's no bias based on size of company.
Okay. Another question we had on the forum was, can you please provide more details on the proposed pool structure, including net financing rate and desired advance rate?
So the proposed pool structure is the junior senior tranche, with the senior tranche ultimately earning a lower return, but protected by the junior tranche. So net rates, again, depending on the profile of our buyer pool, can be anywhere between, say, 7 and 13% on a 120-day rolling basis. So it really comes down to what that buyer pool looks like at any given moment to be able to determine that against the cost of borrowing. Where's the majority of the liquidity coming from? Is it on the tin side? Is it the drop side?
All right. Now, in your submission on the forum, your POP submission, you predict a default rate of under 1%. Now, since you set up shop a year ago, what's the default rate been? And what's the basis for your prediction of a 1% rate going forward?
So the basis, okay, again, we have to sort of split this out. So the default rate would be a new real rate in future once the liquidity pool goes live. So that's yet to be seen. But the prediction is based upon our previous transactions in the TradFi space. So I think that if we're not careful, we're starting to talk about this the same thing, but actually it's two different things. So hopefully that answers the question.
Yeah, I think it does. And just perhaps we can finish off. I see some people in the audience who appear to be part of your team. Can you just tell us just a little bit more about who else is on, who else is part of ICS and what they do?
Yeah, so on the call with us today, we've got Maya and Jill, who are directly related to Intero Capital Solutions as operations manager and DevOps manager. So that's to support our processes, our internal processes, designing them and implementing them, and then providing the platform on which we operate. Outside of that, we've got Errol Stain, who represents Intero Trading as the asset originator and sits with funder representation on credit committee. Then we have the broader network of independents, right? The analysts that we bring on to perform the credit analysis, the credit insurance components, they independent underwriters, for example. So we leverage this independent network as well, which would potentially include Centrifuge DAO as a participant on that credit committee. So we've got a lot of directly internal resources, sort of one removed resources, and then again, a larger network of professionals to help support the business model.
Christian, do you have any questions?
I don't have any questions. It's very detailed. I don't see any questions from the community so far. I would say thanks a lot, Daryl and Tom, for the presentation, for the question and answers, for the overtime. We have 10 minutes overtime. Thanks, Ron, for the preparation of the pool party call. I am looking forward to the next steps of the POP process, because you said it already. You are in the middle of the process, and there are a few more steps to go. Of course, there's some work to do, but honestly, I'm confident that we will see you again in the near future. Hopefully, another presentation or another AMA, we will see, and hopefully we will see a pool soon.
Absolutely, and thanks to Centrifuge, the community, and to you guys as well for hosting us and giving us this opportunity to present and dive into, sort of the high level, middle level, and low level of what the opportunity is from Intero Capital.
Yeah, and we've hugely enjoyed it, and of course, this is only just one step in the process. So anyone on the call or anyone who sees this video on YouTube, in future, we'd be delighted to engage with anyone on this and take things forward, whether it's specific to Intero or it's more of a sort of a DeFi ecosystem matter. But very happy to engage with anyone.
Yeah, what's the best way for people to reach out to you, either of you two, if they have follow-up questions or concerns about ICS?
Yeah, so the forums, of course, the Centrifuge forums, and we're also available in Discord. We're in the Centrifuge Discord. So we've tagged ourselves with Intero Capital Solutions. I'm in there as Daryl Stain. Tom's in there as well. So feel free to reach out to us through either channel.
Okay.
Perfect. Thanks. Is there Discord contact in the forum? Is it available in the post that they can contact you? Or
not, I'll go and add it to it. It should be in my profile. I think in my profile I've linked to my Discord account.
Perfect. Yeah. Thanks a lot. Very interesting, and looking forward to see you soon. See you guys.
Right.
Thanks.
Christian,
Thanks a lot.
thank you so much.
Bye. See
Bye-bye.
you.
Thank you.
Thanks for hosting, Christian.
Thanks for the preparation. Bye. See you.